Welcome back to the channel, Warhammer Man back in the studio, and today we're going to be doing something a little different. We're going to be taking a look at Games Workshop, some of the financials, stock price, and what I think's in the future. If you're new to the channel, make sure you like and subscribe for regular Games Workshop content. I typically do everything wargame related from Warhammer 40,000, Kill Team, Necromunda, Age of Sigmar, and warcry as well. And the majority of what I do is reactions, reviews, commissions, how-to videos, and all that good stuff. And the truth is, that content's not going to go anywhere. That's going to be the majority of the content that I continue to make going forward. And a little bit about me, in case you're new to the channel or you just don't know, I've been involved in the hobby for over 2 decades. Started playing Warhammer back in the Rogue Trader days, Warhammer Fantasy, and everything in between. Necromunda, Kill Team, all that good stuff. And like many people, I've come and gone, but I've always been a player, collector, and always really enjoyed it. But along the way, obviously, like many people, I created a career for myself and made a living, in my case, in the finance world. So you could argue that my specialty is financials. Essentially, what my career is using fundamental analysis to take a look at the financials of a company and determine if there's an arbitrage between the current market price of that company and the future price of that company. So essentially, I try to determine, is a company overvalued or undervalued, and then my job is to identify that, create a case for my reasoning, and then use the information that I found to make money off of. So essentially, that is my career, but Games Workshop and its games are my hobby. And occasionally, the two things blend, as obviously I'm an investor in many of these markets, and as a hobby enthusiast as well, I recognize that some things have been changing, a couple trends that I picked up on, and some that I've seen in the past from Games Workshop made me dive deep into their stock. As an investor myself, I have to keep an eye on my investments and take a look, and while it's no secret that Games Workshop has done extremely well over the last couple of years, there were a couple things that were happening that started to raise red flags. So again, if you're overly sensitive or this type of content bothers you, please go on to the next. Don't take any offense by this, and I'll be glad to have you check out some of my tutorial videos, how-to, reviews, reactions, etc. I have nothing against Games Workshop as a company. I love their models, I enjoy their games, and the truth is, I'm not going anywhere, and neither are they. But I've made a couple videos lately pointing out some things that I was noticing and the trend, and most of those things have played out. And while I've caught a lot of backlash from white knights trying to defend Games Workshop or haters coming to the channel telling me I didn't know what I was talking about, quite a few people have asked for specifics about how I determine things, what trends I saw in the future, and the direction of where Games Workshop was headed. So I made another recent video talking about Games Workshop before the most recent financial statement was released and what I expected from it. And since then, a couple other channels have actually made some reviews as well. And like me, they each have their own specialties. So the production quality and skits from some of these other channels might be a little more entertaining, but mine is of a different nature. Facts-based analysis. And in this video, we're going to explore a couple of those facts and see what's really going on here and how I was able to determine this. So here we have in front of us a Games Workshop chart. This is the stock price for Games Workshop, GAW, Games Workshop Group PLC. It's traded on the London Stock Exchange. And what we have here, a breakdown of a couple of videos that I did along the way. So we see here first, I made a video on my channel called Beast Snag a Bust. That was right around July, and that was one of the sets that sold out instantly. I waited in the queue system online to purchase it, and it was gone before I could even get a copy. I waited in the queue system for over an hour, made a video live, and was very disappointed. That was what I like to refer to as maximum FOMO, not just for me, but for the community in general. We then saw a similar situation happen with Dominion. They had the queue system set up and ready to go, only this time we saw something different. Now, of course, the difference between a single army box for 40k and a new edition for Warhammer Sigmar, you would expect the numbers and volumes to be different, but I was able to ascertain some information about the availability and total quantities of the Dominion that Games Workshop had available. And using that information and the fact that the queue system instantly disappeared, Games Workshop had essentially enacted a 2-week pre-order for Dominion for the first time ever, and allowing people to basically pre-order directly from them, again, taking advantage of the maximum FOMO. It wasn't until about a week later, though, obviously there were some red flags as the queue system was gone almost immediately and the stock did not disappear from their shop. But we noticed something with some of the stores locally as well. They had placed large orders for Dominion, expecting it to sell out, hoping that if they placed larger amounts of product orders that they would get at least a portion of those orders. So many of them over-ordered, anticipating that they wouldn't get their whole order filled. Games Workshop then responded, telling them that after the pre-order period was over, that they would receive their shipments in 3 separate segments. The initial segment, a second one about a month later, and then finally a third one a couple months after that, and that would be how their orders would be filled. Only we saw something quite different happen. Obviously, the product did not sell out on their store, even with the 2-week pre-order window, and then shortly afterwards, they didn't even contact the retail stores. They literally just shipped out the entire orders, the ones that they said would be delayed over the next couple months. And they did it without telling them and immediately just charged them for the entire quantity. So if you ordered, say, 75 boxes and you were expecting them to be broken down over the next few months, hoping that you would get at least 50, maybe 25 of them, instead, all of a sudden, 75 boxes just showed up and you were charged for them, which is fine because you did order them. But that was when I started to notice some changes. We had peaked in FOMO and essentially in price. So here on the daily chart, we see the Beast snag a bust, the Dominion flop shortly afterwards, and then we see Games Workshop reach maximum valuation at $4.5 billion for the company, right around the beginning of September. I then made a video shortly afterwards, about September 13th, and it was titled Games Workshop is Failing. And when I made that video, again, it was pretty popular and overall well received. I did catch quite a bit of flack from people about it. They didn't like the attitude, didn't like the overall, perception that I painted of their precious little company. And again, it's nothing personal. I love Games Workshop's models and really enjoy it. And I was an investor at the time, but around this time is when I uninvested in the company, anticipating that some things were starting to go wrong, some red flags. And that's when I really started to take a look into their financials as well. You can see any of these videos as well. They're all published up on my channel. So over the next couple months, though, nearing towards the end of the year, same thing was happening over and over again. The Black Templar box was not selling out, and then we had the delays and the release of the limited edition Warhammer Age of Sigmar and Warhammer 40k Battle Forces, which once again were not selling out. And again, I made a couple videos along the way, and overall were well received. A couple people gave me some flack or gave me some personal anecdotes of their experience, how previous year boxes hadn't sold out or they were still available at their shop. And the truth is, I understand the world is global, but really not going to be relevant towards like the whole scope of things. So when I say something's selling out or not available, I'm referring to for anyone in the world to go ahead and find it on Games Workshop site, etc. So we see afterwards we had a short run up in the stock price, and then I made a video once again right around the end of December called Games Workshop Propaganda, which is where they came out and essentially were talking about how great the year was and how successful it was. And I basically broke it down and called out a couple of points, but keep in mind I also said some nice things about them as well. And the idea of this channel is not to slander Games Workshop. Again, I really like their products, but the truth is I can't be bought, nor am I bought like many of the other content creators. So you can come here and expect an honest and open review. When Games Workshop does something wrong, I'm going to call them on their shit. When they do something right, I'll be the first one there to pat them on the back and likely make that purchase as well. I have quite a collection, so in no way does me hurting Games Workshop do anything beneficial for myself. So that being said, let's keep moving on. I then made a video called Games Workshop Sales Implode. Once again, caught quite a bit of flack on this one, and people argued with me that I had no idea what I was talking about. Show me the numbers, bro. Give me some proof, bro. And I basically said, look, we have an earnings report coming out very shortly, and I suspect based on a couple of things and diving deep into their financials that it's going to be a huge disappointment. That video was right around here, and you'll see the earnings report was only a couple of days later. From that point, when that earnings report came out, we saw immediately on that same day a 12% drop in the stock price. So it was very clear that I wasn't the only one seeing what was wrong. At least, maybe I was the only one ahead of time, but I wasn't the only one after it came out. From that point, we're down over 20% in the last week or so. And like I said, a couple other people have made some very aesthetically pleasing videos, with skits and enjoyable things, cartoons, all kinds of cool stuff and fun stuff that you can go and watch. But that's not what I do. I'm not about the crazy production quality. I'm about the facts. I'm about the numbers, bro. And that's what we're talking about today. So today we're going to take a deep dive into their financials. We're going to look at some of the things that were pointed out here, what direction I think we're going in, and then also we're going to actually look at the financial statement. And I'm going to tell you what was telling me ahead of time what was wrong and what's alarming me in the actual financial statement itself. So again, we see various videos that I released in white here. We see the valuation at the peak here was 4.5 billion. When I made that video talking about the earnings report, prior to it coming out, Games Workshop's valuation was down to 3.6 billion. So it had lost over $900 million in valuation in just the last couple months. Since that video came out, we immediately dropped another $400 million in shareholder value. And by shareholder value, I mean the value of the company. And that's the most important thing. It's the actual value of everything. Intellectual assets basically is just the stock price multiplied by the total number of shares outstanding. So it's what people are willing to pay for the existing stock. So it went from 3.6 billion to 3.2 billion, another $400 million loss, and a clear validation by the market. They had voted and agreed that something was wrong. And again, since that video, I did a follow-up video. And since then, in just the last couple days, Games Workshop has hit a new low. It's down to a $2.9 billion valuation. So in just that short period of time, from the absolute high, the highest valuation that Games Workshop has ever been at, to our current valuation now, Games Workshop is down 35%. So 35% of the company has literally poofed in the last roughly 5 months. So in less than 6 months, Games Workshop has lost over $1.6 billion in shareholder value. Their job is to maximize shareholder value. So to me, that's not a good job. So anyway, let's dive into some of these numbers and see what I was paying attention to and what was a little bit alarming. So if we just click on the earnings report right here, I can go ahead and pull up some of the detailed financials. And that's what we're going to do. So we see now the market cap in, this is all in GBP, gold British pounds. We see the market capitalization is $2.68 billion. The recent dividend was 2.63%, a record. And then we also see that the price to earnings ratio is 22.5 to 1. And the earnings per share is $3.64 gold British pounds. Overall, from the surface, it doesn't look bad. The balance sheet is growing. Assets growing. Debt to asset ratio, 30%. Not bad. We see the income statement constantly rising, 158 million. Net income 30 million back in 2016. 221 million. Net income 60 million in 2017. Revenue 256 million, net income 65 million in 2018. Revenue 269 million, net income 71 million in 2019. And then 2020 record year, revenue of 353 million, net income of 122 million with a profit margin of a record 35%. So again, on the surface, everything looks great, but that's not what I do. I'm sort of like a detective of financials. And done quite well for myself. So you can trust what I'm looking at here and what I'm pointing out to you, but hopefully I can quantify it in a way that it's more understandable to a regular old person. So here again, looking at these numbers, we see they're ever increasing and everything looks good. Gross profit looks good, rising consistently. We see total revenue rising consistently, but that's only just what we've seen so far from their actual reports. As we get into it, another way that you can look at something is not just the way they've reported it, but also something called the TTM, and that refers to the trailing 12 months. So what it does is we have these annual and semi-annual reports coming from Games Workshop, but there's a lag behind when they actually report the data and what's happening in the meantime. So by using the trailing 12 months, we're basically just looking at all the most relevant data within that 12-month time frame, rather than looking at whenever they reported in 2020 and comparing it to 2019, etc. So we can see here that over the trailing 12 months, we had a 4.5% increase in 2019. We had a 42% increase in gross profit over 2020. And then here in the trailing 12 months, we have a negative 2.33%. So we see that something's happening and the company is not growing the same way that it was. Matter of fact, it's actually shrinking its gross profit. And then again, in total revenue, we see it was up 5% in 2019. we see it was up 31% in 2020. And now here over the trailing 12 months, we see it's up only 1.3%. So it's growing, but barely. And then here we can look at cost of goods sold. We see in 2019 it was 92 million. In 2020 it was 100 million. And then now here, trailing 12 months, it's 110 million. A 10% increase in cost of goods sold. Well, is that giving us the whole picture though? Maybe not. Again, we'll look at our operating expenses, 102 million in 2019, 115 million in 2020, and then 125 million in trailing 12 months. So when we break it all down and we see the operating income, we see it was up 4% in 2019. We see it was up another 85% in 2020. So it almost doubled over the previous year. And now over the trailing 12 months, we see it's down 11%. But you say, yeah, but it's up 85% over the year before. So who cares if it's down 11% over the last 12 months? Well, I'll tell you who cares. Shareholders. Because the way the company is valued is based on future earnings. So if the future earnings are going to be less than what people expected and much less than they were the year before, that means the company overall is going to be worth less. And that's not good. Companies are supposed to consistently grow. People want consistent growth. They would rather have a 5% growth consistently over 20 years than erratic numbers where one year they have massive growth and another they have big losses, because it makes it very difficult to value the company. So let's keep scrolling down here and look a little more into the details. So none of these are too crazy. We could get into all these and break them down, but I don't want this video to be too long. So let's look at our net income. This is very important. In 2018, they made $65 million with a plus 10% over the previous year. 2019, $71 million with 8% over the previous year. And then in 2020, they made $122 million, a record number, with a 71% increase over 2019. But now here we see the trailing 12 months, 119 million and minus 2.21%. And again, you say, well, that's not that much. They were only making 3 million less. It's only down 2.2%. But what is it not telling us? What can we expect into the future? That's the most important thing. And again, we see the basic earnings per share have been rising, but now we're seeing a decrease. Overall, if we take a look at the balance sheet, we see that it's looking pretty good. Nothing too alarming right here. It's not like they have any problems that would wave a red flag. Let's look at our cash flow now. So here we have our cash flow from operating expenses. And again, just looking at 2019, it was at $104 million. In 2020, it was $132 million. So quite the increase. But now here over the trailing 12 months, we see it's actually down 17.76%, down to 109 million. But that's almost back to where we were in 2019 after essentially 2 years of record profits. So what's going on here? Where's all this money going? Why did they just have 2 years of record profits and all of a sudden they're back to where they were a couple of years ago? And what about the stock price? What about the company? What's going to happen with it? Where's all this extra money getting spent? Let's keep looking. Here we see the cash from investing activities, 24 million, 30 million, and 35 million. So that's good. They're investing, losing a little bit of money on it, but trying to further their business. It's good to invest in your business. That's how you grow. And then finally, we see cash from financing activities. Again, we see about 56 million in 2019, 70 million, and then 81 million over the trailing 12 months. Nothing to be alarmed at. I don't think so. And overall, though, if we scroll down here and look at the very bottom, we can see the scariest part, the free cash flow. And here on the free cash flow, we see it's down quite a bit. Quite a bit. The free cash flow in 2019 was 88 million. The free cash flow in 2020 was 115 million. And now we see over the trailing 12 months, the free cash flow is down 23% to 88 million. That's a little alarming to me. And then finally, let's just take a look at our statistics. So what these statistics are going to do is just give us an accurate idea as to where Games Workshop is now relevant to where it's been in previous years based on various ways of calculating their valuation. So here we see the price to earnings ratio, which is basically just the stock price divided by the earnings. So typically the lower the number is, the lower the valuation, the higher the number, the higher the valuation, assuming that growth will be in the future. So we see here in 2018 it was 21 times, almost 22. 2019 it was 36 times. 2020 it fell back down to 32 times, and now currently it's around 22 times. So It's a little bit high historically, but compared to the actual chart here, not so bad. And then we see price to sales ratios, 4.4, 5.7, 9.6, 11.1, and now here, 7.5. So it's dropped quite a bit because the stock price has come down so much. And then price to cash flow, we see typically like 2018, 20 to 1, 25 to 1, 29.5 to 1, and now here we are at 24.5. So overall, we see it's starting to drop and come back down more in line with what you would expect, or at least a little closer. So now that we've dived into some of the specific numbers here, let's try to quantify this and see what's going on here. So a lot of people have looked at the earnings report, and Games Workshop reports every half. And then they have an annual report that's for the entire year, which we'll actually take a look at that here in a minute as well. But I want to look at those numbers, and I want to see how they line up on this chart here. So I talked about earlier the lag, the little lag effect basically between when Games Workshop reports and when the actual numbers stop. So for instance, our most recent earnings report, this one right here from the 11th of January 2022, just happened. That period ended on November of 2021. So that's what this yellow line here represents. And then we look at the previous earnings report before that. And again, that was reported on the 27th of July, 2021. And the period ended on May 21st of 2021. And then again, we can just do the same thing. And we'll see that each of these yellow lines on the screen corresponds with when the actual period ended. And then the E here at the bottom is when it was reported. So we see essentially the difference is the period ends in November and then it's reported in January. So a few months later, so there's quite a bit of a lag. And in this case, since we got our last earnings report, there has been quite a bit of downside pressure on the price action. And we see obviously that we have reached a peak here in peak FOMO and everything going on. So I hope I'm starting to paint a picture for you. Now, people have argued that Games Workshop had all kinds of problems, with the lockdowns, and people maybe weren't making as much money, and Brexit, and all these different things. But the most important thing to realize is that Games Workshop was at all-time highs and making record profits throughout this time. So while other people could complain and say there was extra costs, there was extra transport, there was extra production, the fact of the matter is that all this benefited Games Workshop because it reached the highest stock price ever and had record sales and record profits. So just looking at this, we can see that in the first half of 2020, Games Workshop had $82 million in sales. During the second half of 2020, they had $187 million in sales. So here I have in blue, essentially the total gross revenue that Games Workshop had. And then we have minus the cost of goods sold, gives us $177 million. And then after everything is taken out, taxes, all that good stuff, we have a $71 million for the year of 2020. And then again, I did the same thing for 2021. So we have 162 million plus the 191 million, combined the entire year up. And then here in blue, we see $353 million. And then if we just take out our cost of goods sold, we have $253 million. And then finally, we have our net profit of $122 million. So again, we did 71 million in 2020. And then in 2021, we did 121 million. So not quite double, but a substantial increase and record profitability. But what does it look like is going to happen in the future? If we're falling back to those same levels, one could argue that something's not right here. We're not growing for sure, and the stock price is not reflecting it. And as a matter of fact, we can see that this was our pre-pandemic levels back in 2020. And at the time, Games Workshop price right before the absolute peak was $7,295 a share. And now, where we're at, Games Workshop price is $7,995 a share, only 10% above that. So in that period of time until now, the company was worth $2.9 billion here. It rose all the way up to $4.5 billion here, and now we're back to $2.9 billion almost. Actually, I believe this should say $2.7 billion. That's my mistake. But anyway, so we see we're almost back at those same levels again. So in the meantime, Games Workshop made record profits of $71 million and $122 million over that period of time. And now here the company is nearly valued at the same thing again. So what happened to those $200 million? It translated into $1.5 billion in stock price appreciation and $200 million in profits. But we're right back where we started. So did Games Workshop completely mismanage this situation? Did they unknowingly, unexpectedly, unrightfully get a huge boost in sales due to nothing that they had to do with anything, and they were just the recipient of essentially the strange once-in-a-lifetime situation? One could argue yes, because they didn't really do anything differently, and the truth is they handled it extremely poorly. So we see here we have record profitability, and then we have our recent statement that came out. So let's take a look at that and see if that can give us any more insights as to what's going on here. We have our half-year report here. This is the most recent one that they released. And here we see again in pounds all these different numbers that we have and the breakdown, and we can kind of go through and see what they had to say about everything, essentially talking about how they had a record year. It was difficult, but they were able to get through it, and that they're growing, everything's going great. Starts off with a very rosy tune and everything sounds good. And when we start to look into the numbers a little bit more, we can see that not everything is as rosy as they say. So when we look at the 6 months of 2020 and then compare it to 2021, we see the revenue in 2020 was 186 million. And then in 2021, it was 191 million. But they just had all these record sales and everything. So how come when we compare the 6 months to the year before, they're so close in line? And again, the operating profits, 186 million and then 198 million. And then we see something different here. The royalties received. So we had royalties received in 2020 of 83 million pounds, and then here 68 million pounds. Operating profit of 8.7 million pounds, and then operating profit of 20.1 million pounds. So again, everything looks rosy, it looks good. Why is this not adding up? We just have to dive a little bit deeper. We're almost there. So here we see the revenue by segment. And again, they have it broken down 4 different ways now. One of them adjusts for constant currency, and one is actual rates. So essentially it just eliminates the difference in currency fluctuations over that time period, which is pretty standard. It's not uncommon to see something like that over a worldwide company. But usually when it's included, it's to kind of fudge the data a little bit so things look better than they were. So here we see overall trade in this 6-month period was 112 million. But we see that in 2020, the 6-month period corresponding to it, 104 million. So it's only up by 8 million. And then we see in retail, it was 36 million in 2020, and then 43 million in 2021. And then our online sales were 45 million in 2020, but in 2021, they're only 42 million, which of course things had opened back up, so it makes sense it would be slightly different. But here we have a total revenue for that 6-month period of 186 million and 198 million. So it's only slightly higher. And then here, if we look at the operating profit, this is when things start to show up a little more clearly. We have 186 million in 2020. We have 198 million revenue in 2021. We have gross profit in 2020 of 141 million. We have gross profit in 2021 of 138 million. So it's actually gone down here. Operating expenses of 57 million in 2020, operating expenses of 64 million in 2021. So of course it was a little more expensive because they did record sales. As a matter of fact, they did almost twice the volume in sales. So it's not unexpected that it would cost a little more money to do all that extra sales. But when we look at the operating profit in pre-royalties received, it was 83 million in 2020. It was only 74 million in 2021. So they had record sales, but the profits were about 10% lower than the previous year. Matter of fact, a little more than that. The only thing that actually made up the gap was the royalties. Previously, it was 8.7 million, and then the royalties in 2021 were 20 million. So 2020, it was 8.7 million. 2021, in that 6-month period, it was 20 million. And when it was all said and done, the operating profit was 92 million compared to 94 million. So 8.7 and 20. Here we see that 8.7 million in royalties here and the 20 million in royalties here. And then here we see the operating profit pre-royalties received was the 83 million and the 68 million. So once again, we can see the gap between, and the only thing that actually made up the difference, which was still less, was the addition of the royalties. So the company had record sales of products, but the profitability was lower. And then even with the addition of the royalties, they still were making less money. How can this possibly be true, especially considering that they raised the prices on all their goods as well? So they were selling more stuff at higher prices, and somehow they made less money. But we also looked into it, and we already saw that their costs aren't up. Their costs are actually in line with what they've previously been in the past. So none of this really adds up to it. But that's when we start looking into this even further, and we can find that there's lots of other things that don't quite add up. Let's look at this little statement right here that starts it off, and then when we read the statement at the end, we can see how much things have changed. So, Games Workshop and the Warhammer hobby are in great shape. We're on the front foot and confident in our ability to continue to deliver our strategy. Our commitment to focus on real cash returns and return on capital continues to deliver honest and consistent returns to our owners. We will continue to try our best. In the period reported, we have delivered just that. They're going to continue to try their best. Thanks to a resilient and engaged global team, we have had another great 6 months. We continue to deliver the day job, design and making the best miniatures, books, games, and paints in the world. With a relentless focus, we continue to support our existing customers and build new communities of like-minded Warhammer hobbyists. This, despite on occasion having a one arm tied behind our back, e.g. global travel restrictions, and our retail recruitment offer has been compromised for some time. So obviously they're kind of doing a little cop-out here. One arm tied behind their back, but sure, everybody had one arm tied behind their back. And also they had record sales. So I guess the one arm tied behind their back wasn't too bad. And here they say that their relentless focus is to continue to support their existing customers and build new communities of like-minded Warhammer hobbyists. Well, I don't know if you've jumped on any forums lately or saw that they don't have comments turned on any of their videos, but one could argue that they're not doing too great supporting their existing customers. And if you've had to deal with Games Workshop's customer service at all over the last couple years, you'll know that they're terrible. Not just the delay between the time they get back to you, but their overall terrible attitude, the way they respond to emails, and the way they try to blame you for anything that goes wrong. You literally can look at their site, and I've had personal experiences with it myself. They essentially say that if you provide a receipt and you have a broken model, send some pictures, show us the receipt, and we'll replace it for you. But if you've had to deal with it, it can be an absolute nightmare dealing with them. So as we proceed here, it says, we are proud and humbled most days with the feedback that we receive, particularly that the Warhammer hobby continues to be a happy place for most people. We are ever more mindful these days of the role hobbyists play for those who are struggling with well-being challenges. We will continue to work hard to ensure that the Warhammer hobby remains a fun and immersive pastime, offering people around the world an opportunity to form friendships and find support and to express themselves creatively as they explore Warhammer's fantasy worlds. I'm going to skip over this next part here, so it's not too controversial, but essentially they just say what everyone would expect. Some issues with the current situation and the attack of Nurgle. So here under growth, it says, the global team has delivered another record sales performance at a constant currency rates. So here they're saying they delivered record sales performance after we modified it using our multiplier for constant currency rates. So that's interesting. This is fantastic. The prior year was by far our best performance ever. Our plan was rough around the edges than we would have liked. This will likely remain the case for a few more months as the global distribution continued to ease. So they're expecting more turbulence. To be honest, I'm a little disappointed that we have not delivered to our full potential. I'm a little disappointed too, Games Workshop. E.g., having to delay some of our new products due to shipping issues. I hope we get the opportunity in the second half. Yeah, I hope you do too. Even so, I am delighted to report that we continue to perform well in most countries. They're doing well in most countries, the exception being Australia. The ongoing Nurgle situation, restrictions there, have kept our stores closed, something I know that has frustrated our passionate store managers. The team is ready to bounce back as soon as they get the chance. The performance of our core product ranges remain in line with our exciting operational plans. See below for more details. Interesting, Games Workshop. Growth continued. Our profit before tax is down $3.4 million. However, excluding foreign exchange movements and increased carriage costs and paying our staff more, a good thing, our net core business profits are broadly in line with last year's record performance. When we say the core business, we are referring to our business that focuses on realizing our intellectual properties as miniatures and supporting products, excluding licensing. But wait a minute, we know that the licensing is the only reason they even were profitable over the previous year. So why are we excluding the licensing now when we know that that's the only reason they even beat their numbers to begin with? We continue to remain focused on our core business metrics and are working tirelessly to improve the ones that are in our control, so they're not in control. In the short term, some of our global freight and raw material supplies have been passing some cost increases onto us. We will be working harder over the period ahead to ensure they are fair. The negative impact of these on our gross margin is about 3% to date. The discount we offer to our trade account and our global RRPs have not significantly changed. Pragmatically, this is under constant review. So their gross margin increase is 3%, but we know that their profitability went from last year 24% to this year 35%. So we know that on a net effect, it's costing them 3% more because of all the things going on that are hindering their business, but they're making 10% more. So they're net positive because they're charging more for their products. So they're paying their staff more, they're paying more for shipping, they're paying more for production. But by the time you take all the things that they're paying more for, and then you take out how much extra they're charging people for it, they're still making an extra 7%, and somehow still their numbers are down. That's an interesting spin. So now let's look at their core business highlights, and this is where we start to see some blatant lies starting to pop out. Our strategy has not changed. We continue to make the best miniatures in the world, in ever-increasing volumes, and to engage and inspire our customers, new and old. In line with our group profit share scheme, payments in cash to staff are $6.9 million. In 2020, they were $6.3 million. Total dividends declared in the period reported were 100 pence per share. 2020, they were 80 pence per share. So a record dividend. Great job. So we continue on here, and they basically just break down a little more information, but this is where some of the blatant lies become evident. So here we see under key priorities, we have made some good progress with our key priorities. Each of these is designed to ensure we deliver our exciting operational plan and continue to engage and inspire our loyal customers. Customer focus. The Age of Sigmar launch in July was our best fantasy launch to date by a considerable margin. This saw us unveil the next chapter in the struggle for the mortal realms alongside some fantastic new miniatures. We spearheaded the launch with a high-end animated trailer, showcasing the mortal realms like never before. This was viewed 28 million times in the period. Sales following this launch have been strong, as this relative newcomer to our offer, it was launched in 2015, continues to grow in popularity. It was viewed 28 million times. I saw that trailer. It was really good. I don't know if you guys saw it, but you know what? Let's take a look, because it was really good, and I wouldn't mind watching it again. So.
Remember why we fight. Chaos won. The dark gods broke us. Demons and blood-pledged warriors wrought ruin and left only ash and bone in their wake. The mortal realms, so hard won, were lost. In the face of such defeat, the armor of mortals could not hold. Pride, greed, ambition tore apart the alliance the God King had built among the races. It is well, then, that we are not mortal. Forged in celestial storm, we are the chosen of Sigmar. We are hope manifest, and where we stand, there will be light in the darkness. No matter the cost.
Wow, that was awesome. Gotta give it to them. They really killed it. That's probably one of my favorite Warhammer cinematics created by them. Viewed 28 million times, you say? 28 million times this was viewed. Here on YouTube it has 998,378 views. That's not even 1 million. So where did the other 27 million views come from? Well, maybe that's part of their business now, is that they branched out into a web hosting service. Maybe they're hosting videos on their own site somewhere? Or maybe that's a blatant lie? Is it possible that they're fudging the numbers? That maybe they're counting in some other strange fashion? Like maybe somebody that scrolled by a video? Or perhaps if you were on YouTube and it popped up and you didn't click on it, or you already had watched it before and scrolled past it another time, something's going on here. That's very shady. It's a couple thousand views or even 100,000 views might say something, but to be off by 27 million views out of 28, this was viewed 28 million times in this period. Sales following the launch have been strong, as the relative newcomer to our offer continues to grow in popularity. So on YouTube, where the video is hosted, it only has 1 million views, but somehow there's another 27 million views that aren't being counted? That's strange. Maybe they're counting people that scrolled by it, possibly impressions and not actually views. But it does say here this was viewed 28 million times. So is that a blatant lie? Interesting. Let's keep going here. Following last year's relaunch, we have been revisiting some much-loved factions from our Warhammer 40,000 universe, with the Adeptus, Space Marines, Orcs, and Astra Militarum, all receiving new models in this period. The new version of Kill Team, our fast-paced skirmish game set in the 40k universe, was well received by hobbyists, proving its long-term place in our offer. We celebrated this with a high-end animated battle sequence, which quickly became our most immediately watched piece of content ever, with almost 6 million views in the first 14 days. Oh man, that was a super cool one as well. If you haven't seen that, you should definitely watch it. You know what? We can watch it right now, because it was awesome. That was freaking awesome, and probably one of my favorite cinematics of all time. They sure did kill it with that one. I gotta give them respect. How many million was that again? So to date, it only has 1.771 million views. Well, that can't be right. So Games Workshop must be hosting videos somewhere else that we don't know about. Could it be on Warhammer Plus? That's got to be it. They must be investing all this money into Warhammer Plus, hosting their own videos, and they're getting all these extra views. That's got to be it. There's no other explanation, unless they're lying. So according to them, they celebrated with the high-end animated battle sequence, which quickly became their most immediately watched piece of content ever, with almost 6 million views in the first 14 days. So they said it's their most immediately watched, and that it had 6 million views in the first 14 days. So they must be counting people that actually watched the video, unless those are two independent statements from each other. That it was the most immediately watched, but it was watched way less than 6 million times, but that it also had the most views, which means that people scrolled past it and viewed it, but didn't actually watch it. But I don't know, that seems dishonest? Maybe I'm just reading too far into it. It must be something on Warhammer Plus. Let's continue. The Imperium part-worked aim to those new, or returning to the 40k hobby, was relaunched in UK newsstands in August. Sales have been ahead of expectations, and launches in other countries are scheduled for the new calendar year. The Imperium magazine makes sense. We're just now getting it in the United States, so they look like they're right on schedule. We have been producing our core products in Mandarin for years using translation agencies, but in this period we moved all translation in-house to improve consistency and quality to our offer in this key market. We have been producing our core products in Mandarin for years using translation agencies. Not sure where they're going with that one. Although suffering from distribution and global shipping, there was a steady flow of new miniatures for our other intellectual property IPs, Blood Bowl, Necromunda, etc., as we continue to provide customers with ever more depth and choice. Our epic Horus Heresy novel series is drawing to a close and its galaxy-changing conclusions. Current standing at over 7.5 million words. We aren't aware of a more detailed and in-depth story in any fantasy or science fiction IP. 7.5 million? I'm not going to add it up on my own, but using Games Workshop's metrics, it's probably more like 100,000 words. Just kidding. We shouldn't jump to any conclusions. So let's keep rolling here. So let's skip over a couple of these small things and kind of get to our conclusion. Community. Supporting these new miniatures, we have continued to put on tens of thousands of pieces of content across warhammercommunity.com and social channels. As a result, we have more Warhammer fans than ever before. On social, despite ever more restrictive algorithms from the big players, we're reaching more people compared to the same period last year. Wait a minute, what? On social, despite ever more restrictive algorithms from the big players. Well, they're the biggest player in the space, so are they talking about big tech? Is big tech censoring Games Workshop? Are they out to get Games Workshop? Oh no. Is there a conspiracy we don't know about? Let's continue. On warhammercommunity.com, users are up 15% across all territories. Even more encouraging, our email marketing is up across all metrics: subscribers, opens, clicks, and revenues, all telling us that we are continuing to grow and retain an engaged customer base. I wonder if that has something to do with the little deal that they ran at the end of the year, where if you just create an account with them and subscribe, you would get a free year worth of Warhammer. That's a pretty good way to get people to subscribe, open, click, and whatnot. Maybe that was some sort of marketing tactic. Within the period, we launched a range of new initiatives to ensure customer experiences of the Warhammer hobby is better than ever. I would argue to disagree with that. The community seems rather toxic and displeased with Games Workshop, but maybe I'm just getting a tainted view. With something for every Warhammer fan, our brand new subscription service, Warhammer Plus, got off to a great start. Is there 2 Warhammer Pluses? Because the one I heard about didn't seem like it got off to a great start. Matter of fact, they were offering people a free model and then paying them with gift vouchers to get them to sign up, and I still saw all kinds of people canceling. So let's read on. Maybe there's another one we don't know about. In particular, our animation and in-house shows have been extremely popular, with 2 million views in total across all shows in just 3 months. 2 million views across all shows in just 3 months? So I guess that's not where all the extra views for the Sigmar trailer came from, because we're still missing 27 million views on that one and another 6 or so million on the Kill Team trailer. So if it's not there and they got a total of 2 million views on the entire platform in 3 months, something is not adding up here. We view Warhammer Plus as a club for our most loyal fans, and will look to extend the ways in which we deliver them even more exclusive content and reward them with exciting new products and service offers. With our operations not at full speed, and to ensure our customers never miss the Warhammer release they really wanted, we introduced a pre-order promise, guaranteeing every fan the chance to purchase the latest releases, without fear of missing out. This is especially important for a hobby where collectability lies at the heart of the experience. As we get back to normal operations, this will be pragmatically reviewed. So they're thinking about getting rid of it. Why would they do that? Because it's unnecessary? They had it for Sigmar, nothing sold out. They had it for Black Templars, nothing sold out. So is it just irrelevant? Because they already peaked? Maximum FOMO has been achieved? Probably. During lockdown, many of our customers missed getting together to roll dice. As restrictions have eased and the world tentatively returns to normal, the Warhammer events team went on a road in the U.S. The effort is kickstarting a return to in-person events has been a rousing success. Each of our roadshow events selling out almost instantly, and with live game coverage broadcasting to hundreds of thousands of viewers worldwide. We look forward to furthering our events program next year. Alright, so now let's look at key priorities continued. Community continued. Our customers really enjoy user-generated content, and as such we are committed to supporting fans as they create their own Warhammer-related events, videos, articles, podcasts, etc. To this end, we are in the process of creating a community outreach team to work with and support creators and prominent community members who champion the Warhammer hobby outside of our own pages and spaces. So not too long ago, they were threatening to sue and legal action against creators, but now they like them? And now they have a community outreach program? Interesting. Very interesting. I want to talk about their sales here as well, and what they had to say about retail and online. In the period we opened, including relocation, 4 stores after closing 8 stores. Our net total number of stores at the end of the period is 519. Retail remains a challenging environment, so we are being pragmatic with our store opening program. Our stores are improving at different rates as a direct consequence of whether they can open or not, so they had a net loss of stores. Our Warhammer World store at our HQ in Nottingham has been open for 8 months now and is trading pre-Nurgle levels. Our Warhammer Cafe stores in Dallas and LA, together with our relocated store in Tottenham Court Road in London, are also performing well. We have the second half gives us the opportunity to once again show our full and unique retail offer and get back to our face-to-face training sessions. The majority of our stores are profitable. 34 stores are not. So net 4 stores closed. 34 stores are not profitable out of a total of 519. So that's okay, I guess. Online sales declined by 10% compared to the same period last year. Maintaining the step change in sales orders levels against the prior year is the plan. As noted above, our customers have a lot of options when it comes to shopping for Warhammer Online, and are able to buy our products both through our own web stores, reported in online, and through those of independent retailers, reported as trade. Let's talk about Asia. We continue to make some good progress. Hampered a little by the process of toy safety certifications, we had our first external audit, which was passed. Various delays have resulted in a decision to move our new release schedule by C.10 weeks to allow us to catch up. Not great for our customers in Asia. However, without the accreditation of our long-term growth would be threatened by legal restrictions. The work on the new Warhammer Cafe store in Shanghai has also been pragmatically paused to ensure it gets off to the best possible start. Like all the other stores, it will be run as a profitable store. We are hopeful about opening a new cafe-style store in Tokyo in 2022. We have in the period increased our RPs by circa 25%, aligned with our global pricing strategy. So they raised their prices by 25% in line with their global pricing strategy. And now the best part, risks and uncertainties. The board has overall responsibility for ensuring risk is appropriately managed across the group and has carried out a robust assessment of principal risk to the business. The top 4 strategic risks to the group are regularly reviewed by the board. The principal strategic risks identified in 2021-2022 are discussed below. These risks are not intended to be an extensive analysis of all risks that may arise, for importantly are the ones which we believe could cause business interruption in the period ahead. Digital selling strategy. As sales through our online channel are over 20% of sales, and down 10%, I'll note, it is now more important than ever that we have a robust plan in place which ensures we are making product available to our customers in a manner consistent with modern consumer expectation behavior. We have approved that started the development work on our new online store. We are also investing in the support functions to ensure it delivers on time. If you've ordered from their online store, there are massive long wait times and deliveries before they ship, so that is definitely a good idea. IT strategy and delivery. With a number of significant business projects in play, all of which are dependent on IT support, there is a requirement for a robust IT strategy which enables us to deliver key strategic projects as well as supporting day-to-day activities. We are keeping the structure of our global IT team under review to ensure IT support needs of the business can be delivered. Media. Whilst this remains an area for future growth, it is imperative that exploration of our IP through media channels does not harm to our core business. Our IP steering team meets every month to discuss ongoing future exploitation to ensure that all use of our IP through all channels is approved, correct, and consistent. They are fully supported by our in-house legal team who will act when needed. Like they did against all the previous content creators that now you're encouraging, but previously you were threatening with lawsuits? So something's changing here. Interesting. Social responsibility. We don't intend to greenwash or to be politically correct. We believe we are already good corporate citizens, and we have been making some good progress quietly in the background. We are looking for ways we can support global initiatives, including climate change, diversity, and equality. We have recruited a senior manager to document a realistic plan to make some progress forever. Our biggest risk is senior management becoming complacent. I will continue to do my best to make sure it does not happen. Our biggest risk is senior management becoming complacent. I wonder if that's what's led to a lot of this downfall. Senior management becoming complacent. Corporate greed. Disrespecting your content creators, your community, and your customers. Raising prices with your global strategy of 25%. Interesting. And then finally, we'll just finish up with the overall outlook. We have proven once again that the Warhammer hobby creates exciting experiences and allows people around the world to come together and have some fun. We continue to focus on making the best miniatures in the world and to document and deliver an exciting operational plan. I'm mindful of the uncertainty caused by Nurgle and the expectations of more growth given our recent performance. To help inform shareholders and followers of Games Workshop as best we can, we will continue to provide regular updates to the market. We are pleased to confirm that we continue to trade in line with expectations and look forward to providing a further update to the market in due course. Finally, I'm once again immensely proud of the global team's performance, the ongoing support of the customers, and those unsung heroes that keep us safe and well. Thank you. Going concern. After making appropriate inquiries, the directors have a responsible expectation that the group has adequate resources, in light of the level of cash generation, to continue to operational existence for at least 12 months, from the date of approval of the condensed consolidated interim financial information. For this reason, they have adopted the going concern basis in preparing the condensed consolidated interim financial information. So they're not going to go out of business in the next 12 months. That's good. And then this is basically just saying that everything is truthful here and they have followed the rules and laws when creating this report. So, well, there you have it. We took a detailed look at it. We looked at the actual chart itself. We looked at the financial report. Just a quick glance back here, we can see that we have essentially fallen to new lows. All of the massive amount of profit, the $71 million and $122 million, almost $200 million in profit that they have made from coming out of the Nurgle. The busiest, most sales, highest profits, 35% profitability over previous years of 25%. So up massively, almost a 50% increase in net profit after all their expenses are taken into account. And yet here we are right back where they started. So people argue with me and say that I don't know what I'm talking about. But the truth is, when you break all this down and you look at it and you look at it by the numbers and everything, it's factual that there's a reason we're right back where we started. And you can tell by the actual report and the way that they worded things that they're definitely fudging the numbers a little bit or maybe talking up their books, but the market's not buying it. The community has voted with their hobby dollars. The market has voted with its actual dollars. And the truth is, we have literally wiped out in the last 6 months since the top right here and everything started to roll over. We have come all the way back to the February 2020 levels of price for the company. And when people argue that the price has nothing to do with the actual company, well, the price is what values a publicly traded company and determines its worth. And the fact of the matter is, if you had a record $200 million in sales and your company is right back where it started, that you're obviously not doing a good job. So there you have it. That's the breakdown. That's the financials. That's the numbers. Hopefully I have shown you what I was looking at here and shown you exactly what I saw in the numbers and given you a good idea. So keep in mind also that I do love Games Workshop. I don't think they're going to go out of business, but there was definitely some red flags here. It's not too late for them to correct course. There's still plenty of time for them to fix some of these errors, some of these mistakes, and to recognize the error of their ways. But the truth is, Games Workshop is at a new low. And if they don't turn it around, which even if they do turn it around, it's going to take quite a bit of lag before we see it in the numbers. I think it's very likely that we see the stock down much lower than it already is. From the peak to where it's at now, it's already down over 35%. I think likely in the next couple months, we will see the price down over 55% from its previous all-time high. And I suspect that we will be back at price levels from November of 2019. So again, Games Workshop stock has done well over the last few years. But for them to lose this much value in such a short period of time after going massively parabolic really shows something about the way the company is being run. And I would not be surprised to see heads rolling over at Games Workshop. Well, there you have it, guys. Let me know what you think in the comments. If there's anything that you didn't understand, or if you enjoyed this video, like to see future videos like this as well, or if this is just not your cup of tea, I'm assuming you're not watching anymore. So, well, there you have it. Make sure you like and subscribe for any Warhammer 40,000, Kill Team, Necromunda, Age of Sigmar, and of course Warcry content. And I'm going to get back to doing what I normally do, making all kinds of cool hobby videos, how-to, reactions, reviews, all kinds of good stuff. But quite a few people had asked for a follow-up and a breakdown, and I did want to go ahead and throw the timeline back out there, show some of the numbers and some actual proof and what we can expect into the future. I know a lot of people are not going to dive into the financial statements or don't understand the technicals or fundamentals of a company, how to look at it, or how to even understand what's going on. So I went ahead and did a follow-up. I hope you guys appreciated it. But that's it for today. Warhammer Man Studios. I'm Warhammer Man, and I'm out of here.